What up, 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 Crypto Warriors, it's Sanctions Crypto, back at it again. Today is Wednesday, July 30th, 2020. The noise you hear in the background is my AC. I'm not going to turn it off. It's too hot here. It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Henry Ford. This is what he said over a century ago about the monetary and banking system, and it's still the same today. If people truly understand what is happening to their wealth, the fact that they're printing a lot of currency and devaluing their dollars and making them poorer, there would be a revolution before tomorrow morning. And instead of marching at state capitals and the capital of the nation, there will be a march on all 13 Federal Reserve banks and the U.S. Treasury. That's just in my opinion, of course. Let's get into it. Chinese banks bar clients from buying precious metals. Think about that. These people have their money in the banks, but the banks are telling them how to spend it. It's their money. If they want to buy gold, not diamonds, but gold, silver, palladium, platinum, whatever. If they want to buy garbage off the street, it's their money. Let them spend their money. But no, they want to be in control. In an attempt to avoid another retail-driven momentum melt-up, similar to what happened with Chinese stocks earlier this month, when government media first encouraged Chinese investors to buy stocks, only to backtrack later when local markets soared, sparking fears of another stock bubble on the mainland. Reuters reported that Chinese regulators and major banks have been rushing to curb precious metals trading by domestic investors to temper speculation that could send prices explosively higher. Something we've hinted just a week ago. This is Zero Edge, and this story is coming from Zero Edge, and they tweeted out a week ago, all gold needs to hit 2,500 is China's momentum maniacs or the Robinhooders to start chasing it, chasing it, I'm sorry. But their first mistake that the Chinese investors, the Chinese citizens, the retail investors made was to listen to their government, right? Because they encouraged them to buy stocks. And when they listened to them and these equities, these prices in the stock markets started to pump out of control, then they took it back. They reneged on it. Oh, no. Please, please, please stop buying. You can't tell people what to do, and then when they do it, get upset. And then on the other hand, as well, you shouldn't be able to tell people what to do with their own money. The scramble to limit risks come as gold prices hit record highs this week, spurred by investors hunting for safe haven assets. There it is, hunting for safe haven assets in markets rattled by worries of rising coronavirus cases, lofty equity valuations, because they pumped it up, because the government told them to pump it up, and a plunge in the US dollar, which prompted Goldman to contemplate if the days of the world's reserve currency are numbered. People are just trying to protect themselves, protect their wealth, all that they worked for against their nation's currencies. And you should be able to do that. Industrial and Commercial Bank of China, ICBC, I have the hiccups, I'm sorry, the country's largest bank, said on Wednesday it would bar its clients from opening new trading positions for platinum, palladium, and index products linked to precious metals from Friday. This is just crazy. I'm going to take a quick sip here of water. This hiccup is driving me crazy. Excuse me, this is just nuts. The fact that these bankers could tell their clients what to do with their own money. Like, the bank works for us, like, because we're the ones that are putting deposits in the banks. The government works for us. Well, not in China, but especially here in the U.S. The governments, they work for us because we voted them in. Remember that. Next, more news coming out of China. Chinese banks urged to switch away from SWIFT as U.S. sanctions loom. China should prepare for potential U.S. sanctions by increasing use of its own financial messaging network for cross-border transactions in the mainland, Hong Kong, and Macau, according to a report from the Investment Banking Unit of China. Well, what's happening is, because China, they're putting more pressure on Hong Kong and taking away a lot of the people's freedom in Hong Kong, as it's being reported, right? Taking away a lot of their freedom. The U.S. is starting to use their monetary, flex their monetary muscles, so to speak, and they're going to put sanctions on China. So China, they already have their own messaging system. SWIFT belongs to the West, and this one right here, greater use of the cross-border interbank payment system, CIPS, instead of Belgian-based SWIFT system would also reduce exposure of China's global payments data to the U.S. So they already have this system in place. They just need to bring more governments from around the world into the fold. This way they could do business on a global scale. Now, the SWIFT system, every time somebody uses it, the U.S. have access to that data. So China is trying to limit their exposure to the U.S. having access to that data because, you know, we're competing with each other. China launched the CIPS clearing and settling services system in 2015 to help internationalize use of the yuan. Supervised by the central bank, CIPS said it processed 135.7 billion yuan a day, or basically $20 billion a day in 2019, with participants from 96 countries and regions. That's a lot of people, or a lot of countries. The report said that if the U.S. were to take the extreme action of cutting off the Chinese banks' access to dollar settlements, China should also consider stopping using the U.S. dollar as the anchor currency for its foreign exchange controls. And this is why last year they had, or maybe it was 2018, they started to deal in oil in Chinese yuan instead of using the petrodollar, whereas the U.S. dollar, where the oil is denominated in U.S. dollars. They started to have the price of oil denominated in Chinese yuan. And we're starting to see that other countries are using that system as well. 96 countries and regions. That's a lot. That means that's a lot of countries that are supposed to be our allies that are using this system as well. They're playing 3D chess, man, or 4D chess, way above my pay grade. But this is what's happening, and these things happening is what's forcing people here in China, around the world, and the fact that they're printing so much currency, they're basically forcing people to stop using their currency. They're basically forcing people to look for a safe haven. This is why they're looking for a safe haven in gold, silver, and Bitcoin. Just like how Max Kaiser stated, you know, it's 3 horsemen of the apocalypse.
But the gold vigilantes and the silver vigilantes and the Bitcoin vigilantes are now riding into town. The 3 horses of the apocalypse, gold, silver, and Bitcoin. It's the new sheriff in town.
It is what people have to do to protect themselves and protect their wealth. They don't want to be the bag holders of these fiat currencies. Next, report coming from Goldman Sachs. Goldman Sachs boosts gold price target, says the U.S. dollar's reserve status is at risk. So we have, I'm just going to go straight to quote, the quotes here. Combined with the record level of debt accumulation by the U.S. government, real concerns around the longevity of the U.S. dollar as a reserve currency have started to emerge. The note explained, gold is the currency of last resort, particularly in an environment like the one where governments are debasing their fiat currencies and pushing real interest rates to all-time lows. And if I'm not mistaken, the Goldman report says that cryptocurrencies aren't an asset in that same report. You know, on one side, they are stating that to buy gold and protect your wealth through buying gold. However, they aren't letting their clients know that, hey, you have this thing over here called Bitcoin and cryptocurrencies. It's a new asset class, and it's been the best performing asset in the history of ever. They are cheating their clients, in my opinion. And that's what this report, or this news article here from the Bitcoinist is talking about. You know, dollar debasement fears prompt questions over reserve currency rank. So you have the team here from, you know, is going through the same thing I just reported that from Yahoo right here. But here it is. Curry and his analysts have made bold calls in the past that have ultimately come true. A standard prediction made by the Goldman head of commodity and research pointed out to oil prices tanking to $20 a barrel. The call was made in September 2019, months after the prediction oil Months after the prediction, oil prices met that once considered overzealous target and went way below it, by the way, because it went negative, remember, back in March. Curry and his team now point to gold as a potential currency of last resort, but they're missing the more obvious solution, Bitcoin. And here it is, a chart, dollar currency index, Bitcoin comparison. We have from April to, what year is this in? It looks like 2019, April 2019. And we see the dollar Bitcoin comparison. The dollar is losing value against the price of Bitcoin, or Bitcoin, I should say. Why Bitcoin is a better answer than gold to current currency chaos. As the dollar fell this week, Bitcoin, gold, and other assets trading against US dollars rose more sharply as a result. The deviation between BTC Euro and BTC USD is significant due to the role of the dollar played in the recent global market shakeup. And while Goldman Sachs is recommending gold perhaps takes the position of the dollar as the global reserve currency, Bitcoin is by far the better choice. And I agree, because for one, it's divisible. You don't have to, verify, so to speak, when you're settling in Bitcoin, because the blockchain does that for you. The algorithm, the computer code, it does that for you. If you're getting settlements in gold, you have to verify each bar of gold, and that takes time, that takes money. All right, and it not to mention the security, all the troubles that goes with it. Right, the only thing that gold has going for it right now is the fact that it has a 5,000-year history, and that's a good thing. However, everything else, as far as being able to travel or settle payments in it and things of that nature, takes a lot of doing. Not with Bitcoin. It takes 10 minutes to an hour. It just depends on how fast your transaction get processed by the blockchain. All right, and you can send billions and trillions. Well, not trillions, because it's market cap is only like $200 billion. But I'm just saying, you can send money, any amount of money around the world in minutes versus gold. I'm not even going to get into reading this, but that's basically what it gets broken down into right here. All right. Next, Bitcoin will reach 100K and destroy anyone who gets in its way. Max Kaiser. Hundreds of billions of dollars in U.S. Paycheck Protection Program funds have reportedly been dispensed to companies that did not need it. This is coming from Max Kaiser and Stacey Herbert on their Kaiser report. So they talk about the 2008 bank crisis, where basically the people at the top at the pyramid, like Jamie Dimon, argued that they didn't this is a quote from him, really didn't need the bailout, but they had to take it because the Fed forced them and nobody else wanted to take it. Like, who says that? How were you going to say you didn't want to take the money, all right, and the Fed forced you to take it because nobody else wanted to take it? I would have taken it. Like, come on. You wouldn't have taken it? Like, that's just straight up BS and straight up lies. And here's a quote from Max. All of these projects will be eviscerated. Adding, now Bitcoin is going to make its move. He explains, here it is. It's going to go up to 100K per coin, but it's going to destroy everyone who gets in its way. So all of these altcoin posers and government subsidy welfare bums will be eviscerated by the one true Bitcoin. It's about time. And I don't know about altcoins getting eviscerated. Maybe a lot of them will be, right? All the shit scam coins, because there are over 5,000 altcoins out there. But really good projects, maybe like in the top 50, top 100, will definitely be there in the end when it's all said and done. Let me know what you guys think. Smash that like, hit that subscribe button. What is your thoughts on 100K Bitcoin and eviscerating the likes of altcoins and all these subsidies that the government is paying out, and also the fact that Goldman Sachs is still not getting it when it comes to gold, and Bitcoin, when it comes to Bitcoin? I think they're definitely lying to their clients on purpose and stacking sats on the back end, right? And the Chinese banks and their own settlement system, so messenger system, because they're going to get blocked out by SWIFT, and the fact that the Chinese banks are blocking their clients from purchasing gold with their own money. This is just nonsense. And this kind of thing, don't think that it can't happen here in the States. Let's talk about it in the comment section below. It's Sergeant Crypto, and I'm out. Peace.